Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at RocketLab.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And real quick before we get into the meat of it, we want to mention the special 14-day trial link below in the description for StockOracle.
Right, which is an AI-aided stock research platform.
Exactly.
Exactly.
It is not financial advice, it's not a trading signal service, and it's definitely not real-time market data.
Yeah, just a tool to help you out. And just full transparency, that link is an affiliate link, so we may earn a commission at no extra cost to you.
And please keep in mind, StockOracle's AI insights and their valuation estimates, they can be incomplete or wrong.
So always verify important facts yourself.
Right, absolutely.
So getting into RocketLab, when you look back at the history of the Transcontinental Railroad, the story we all learn in school is, well, it's completely focused on the dynamite and the steel, right?
Yeah, the brute force of it all.
Exactly, just blasting through granite mountains just to lay down the tracks.
Which is, that's the classic infrastructure phase. It's inherently dangerous, it's incredibly expensive, totally experimental, and frankly, it just burns cash.
Right. But then, once those tracks are actually laid, the wealth-building context totally transforms. It stops being about the laborers hammering spikes.
Yeah, the real power shifts.
The real money shifts to the people who own the freight cars,
Yeah.
the people controlling the commerce that actually flows over those rails.
And that is exactly what we are witnessing right now in the modern space economy. We are seeing a massive shift from a capital-intensive construction project into basically a high-margin toll booth.
Which brings us to what we're unpacking today with RocketLab, ticker symbol RKLB.
Right.
The broader space industry is, it's right in the middle of this painful but total necessary transition.
We're leaving that era of highly experimental startup vanity projects, the ones that just burn through venture capital.
Yeah, and entering the era of cash flowing infrastructure titans. And RocketLab is attempting this massive, almost unprecedented leap right now.
They really are. They are making it crystal clear they do not just want to be a launch provider anymore.
Right. They want to be a vertically integrated space platform.
Exactly. And to understand the sheer scale of that ambition, we really have to look at the fundamentals, the financial engine that's actually funding all these moves.
Because you can't build a platform in orbit on, hopes and dreams.
No, you need serious compounding capital. And their revenue trajectory is accelerating at a pace that, honestly, it demands attention.
So what are we looking at for the numbers?
So for the full year 2025, RocketLab reported $602 million in revenue.
$602 million. That's a solid foundation.
It is, but the momentum didn't just hold steady. In the first quarter of fiscal year 2026, they hit a record $200.35 million in a single quarter.
Wait, $200 million in just 3 months?
Yeah, that represents a 63.5% year-over-year increase.
Wow.
But, the top-line growth isn't even the most impressive metric here. They reported a record GAAP gross margin of 38.2%.
Okay, let's pause on that. 38.2% gross margin. Because I think people might gloss over what that actually means in this specific industry.
It's massive.
Right. If you're a software company, a 40% margin is standard because it costs you nothing to just copy and paste code.
Exactly.
But RocketLab is building bespoke, highly volatile hardware. They're machining aerospace-grade titanium. They're running clean rooms.
Dealing with volatile propellants.
Yeah. Hardware is notoriously low margin. So pulling a near 40% margin on literal rocket science, that is bordering on software economics. How are they doing that?
It's coming down to rigorous manufacturing efficiency and sheer launch cadence. Reusability and standardized production lines are just driving the cost per unit way down.
Makes sense.
And you have to add in their backlog, too. The contracted work they haven't billed for yet just swelled by 20.2%.
Quarter over quarter.
Yep. They are sitting on a massive $2.2 billion backlog right now.
$2.2 billion of guaranteed future work.
Yeah.
That is incredible forward visibility for a stock.
It really is.
But earlier you mentioned that shift from launch provider to end-to-end space platform. And, looking at our notes, it feels so similar to the early days of e-commerce.
Oh, for sure.
It's like the difference between just building the delivery trucks versus deciding, hey, I also want to own the highways and the massive logistics centers.
You want the cargo, too.
Right. You want the whole ecosystem.
Yeah.
And that ambition brings us to the $8 billion elephant in the room.
the pending acquisition of Iridium Communications.
Yeah.
This single move changes the entire DNA of Rocket Lab. They're acquiring Iridium for an enterprise value of roughly $8 billion.
I mean, I have to ask the obvious question here. $8 billion is staggering. Why Iridium? What does a rocket company want with an established satellite communications business?
It all comes down to financial gravity, really, and the holy grail of business, which is recurring revenue.
Okay.
Look at Iridium's financials from 2025. They generated $871.7 million in revenue.
Okay, almost $1 billion.
Right. But more importantly, they operate with a 57% operational EBITDA margin.
Let's break that down for a second because, EBITDA can sometimes feel like accounting acrobatics to some people.
Yeah, fair enough. Operational EBITDA essentially measures the pure cash a company generates from its core operations before you factor in taxes or interest or depreciation.
That's how good the actual business engine is at printing cash.
Exactly. And for Iridium, that 57% margin translated to $495 million in operational EBITDA.
Wow.
And just under $300 million in pure free cash flow for the year.
So if Rocket Lab's core business is, the high-risk, cash-intensive process of rockets.
Iridium is essentially a printing press for high-margin, predictable service revenue.
That makes total sense. They're fundamentally deleveraging their risk profile.
Exactly. It accelerates their path to positive free cash flow. Suddenly, they aren't just relying on launching hardware, they're selling the high-margin subscription data that flows through that hardware.
Day and night.
Yep.
So with the financial scale established, we really need to look at how this alters their competitive moat.
Right, because they're competing in a fierce market.
Very fierce. So
Yeah.
where do they currently stand?
Well, their workhorse, the Electron rocket, is already the second most used launch vehicle in the U.S. and third globally.
Trailing only SpaceX and China.
Yeah,
Wow.
exactly. The Chinese state programs.
So they are already on the global podium. They're not some speculative startup.
No, they are actively and reliably putting payloads into orbit. And in aerospace, operational reliability is your most valuable currency.
Because nobody wants to put a billion-dollar satellite on a cheap, unproven rocket.
Exactly. The switching costs are massive. But then you drop Iridium into that mix.
Right, the network effect.
Yeah, it creates this instant moat. Rocket Lab doesn't just get cash flow, they acquire a physical global L-band satellite network.
Okay, let's talk about L-band. Because the analysis treats this spectrum like beachfront real estate. Why is it so special?
So think of radio frequencies like light. Higher frequencies like the Ku or Ka bands that SpaceX's Starlink uses, they can carry massive amounts of data.
Like broadband internet.
Right, but they're easily blocked by heavy rain, foliage, terrain. L-band is a lower frequency. It carries less data, but it is incredibly resilient.
Punches through bad weather.
Exactly. It penetrates extreme weather, challenging terrain. That makes it critical for maritime shipping, aviation, military comms, places where a dropped signal is literally life or death.
The spectrum is finite, right? You can't just invent more L-band.
Exactly. Owning it is owning a permanent toll road in the sky. And Iridium brings a built-in user base of 2.55 million active subscribers.
So Rocket Lab can design a spacecraft, build it, launch it on their own rockets, and operate the network it uses,
Full stack capability.
which positions them as the only viable player to SpaceX. But, I have to be skeptical here. SpaceX has this overwhelming lead. Why would the market even tolerate a player two? Doesn't SpaceX just swallow the whole market eventually?
It's a valid point until you consider the customer psychology. The U.S. government, the Space Force, the DoD, they are terrified of vendor lock-in.
Strategic redundancy.
Exactly. If the U.S. relies 100% on SpaceX for national security, they are at the mercy of one private company and
Right.
realistically one individual CEO.
They can't afford a single point of failure.
Right. They actively need a strong player, too, to keep pricing competitive and ensure one issue doesn't ground the entire U.S. space apparatus.
So the government is highly motivated to keep Rocket Lab in business.
Very motivated.
Okay, but if the government needs them, and they have this L-band moat, and they're buying a cash-flowing giant, why is the market punishing the stock so severely?
The disconnect is glaring, isn't it?
It's brutal. If you're looking at the technicals and sentiment, the stock is trading around $64.95.
Yeah, that's a multi-month pullback of over 40%.
40%.
Yeah.
They're sitting much closer to their 52-week low of 57 than their high of $150.
What Wall Street is seeing that's causing this panic comes down to two words: dilution overhang.
The bridge loan.
Right. To fund the cash portion of the $8 billion Iridium deal, they had to secure a $3.6 billion bridge term loan.
And the market hates uncertainty.
Hates it. Investors look at that $3.6 billion and calculate the risk. If Rocket Lab has to issue millions of new shares to pay off that debt, existing shares get watered down.
So the market is basically holding the stock hostage until the integration is proven.
Precisely. You can see it because positive news just bounces right off the share price. Like, they just secured a record $266 million multi-launch contract with the Space Force.
Their biggest defense award to date. And the stock barely reacted, right?
Completely ignored it.
That is wild. But, there's another sentiment metric that feeds this fear, the insider flow.
Yeah, this is a big one.
Over the past 90 days, insiders have sold a net 3.5 million shares. If the thesis is so bulletproof, why are executives dumping shares? Is this informed distribution or just standard profit-taking?
Context is absolutely vital here. We are seeing 11 insider buys versus 79 insider sells over the last 90 days.
So definitively net negative.
Definitively. However, before this 40% pullback, the stock had a massive run-up. And in tech companies, so much executive compensation is tied up in stock options.
Right. They don't get paid giant cash salaries. They get equity.
Exactly. So when a massive liquidity event is on the horizon, like an $8 billion acquisition, insiders routinely take chips off the table to diversify.
So it's not necessarily a loss of confidence.
Most institutional analysts view it as taking advantage of prior liquidity, not fleeing a sinking ship.
Okay, so if the market is paralyzed by debt fears, they need undeniable proof that the business is thriving. What are the actual catalysts coming up that could force Wall Street's hand?
The catalyst calendar is incredibly stacked, starting with Q2 fiscal year 2026 earnings guidance.
What are they projecting?
A record $225 to $240 million in revenue. That is well above the analyst consensus of $207.5 million.
If they hit that, models have to be revised upward.
Exactly. And commercially, they just signed 3 more dedicated missions with IQPS, the Japanese Earth imaging company.
Bringing the total plan to 18, I think.
Yep. And simultaneously, the Space Force tapped them for a $981 million test program.
So they're embedded everywhere. But what other rumors? The aerospace sector is always buzzing.
The biggest whisper right now is the Golden Dome space-based interceptor program. There's chatter. Rocket Lab might be included alongside Raytheon.
A space-based interceptor network. That sounds like sci-fi, but financially, what does it mean?
It could unlock multi-billion-dollar procurement pipelines. It would cement them as a top-tier prime defense contractor, not just a launch provider.
And all this is mostly built on their small lift rocket, the Electron. But they're building a much bigger boat, the Neutron rocket.
Neutron is the game changer. It's their medium-lift, reusable launch vehicle, the direct answer to the Falcon 9.
And the milestones are happening now.
Yeah.
In mid-July, they successfully completed a full-duration burn test of the second-stage AVAC engine.
Right, the aerospace vacuum engine.
Which is incredibly hard to test on Earth.
No, it's a nightmare. In the atmosphere, air pressure pushes back on the exhaust. In a vacuum, the exhaust expands wildly. If the nozzle isn't perfect, you lose thrust.
So you have to fire it inside a massive vacuum chamber on Earth.
Exactly. Passing a full duration burn means the engine didn't melt and the physics hold up. It keeps Neutron on track for late 2026.
And Neutron already has 5 commercial missions booked.
Which is just wild market psychology.
It really is. It's like selling out a stadium concert before the stage is even built.
It validates that the market is desperate for an alternative to SpaceX. They are pre-funding the development.
It's a great catalyst, but we have to talk about the bear case. We can't just look at the upside. We need to explain the downside clearly.
Absolutely. The execution risks are substantial.
Let's start with the acquisition execution risk.
The Iridium deal is just gigantic, and there's a collar mechanism protecting the exchange ratio of the deal.
How does that collar actually work here?
In stock and cash deals, a collar protects the company being acquired. If Rocket Lab's stock drops below a threshold before closing, they are contractually obligated to issue more shares or pay more cash to make up the difference.
So if the stock keeps falling, the debt servicing costs on the bridge loan explode, or dilution goes into a death spiral.
Exactly. That's the first major risk.
And the second bucket, the Neutron execution risk.
The entire Player 2 valuation relies on Neutron flying reliably in Q4 of 2026.
Because delays are super common in aerospace.
Very common. If there's a multi-year delay or a launch pad failure, it hard caps their addressable market. They get stuck in small lift while SpaceX runs away with medium and heavy lift.
So the margin for error is razor thin, but despite these risks, Wall Street remains stubbornly bullish.
Yeah, the price targets reflect massive upside if they pull it off. New Street Research initiated a $150 target. Stifel maintains a buy with a $132 target.
And Morgan Stanley has a bull case of $293.
Right. They view the 40% drawdown as a severe mispricing.
So synthesizing everything, what's our final verdict on this one?
Based on the fundamentals, technicals, and catalysts, Rocket Lab earns a very strong bullish score of 8 out of 10.
8 out of 10, nice.
Yeah, it's a rare transition from a cash-burning startup to a high-margin operator. Assuming they navigate the integration and hit the Neutron launch window, we see a highly compelling long-term view here.
Remember, we're not telling you to buy, sell, or hold. This is just our analysis. But tracking this company, it's a masterclass in how capital expenditures synthesize into recurring revenue.
It teaches you to look past short-term dilution to see the structural moat.
Which leaves me with one final thought. If barriers to entry are so high that only SpaceX and Rocket Lab survive, are we headed toward a global duopoly controlling Earth's orbit?
The consolidation definitely points that way.
And if so, who regulates the toll bridge to the stars when nation-states rely entirely on two private companies? Something to mull over.
Definitely.
Well, that's it for today. If you enjoyed the talk, please remember to subscribe, like, and comment underneath.
And don't forget to check out that special 14-day trial link for StockOracle down in the description to aid your own research.
Thanks for tuning in to Smart Wealth with Joshua. We'll see you tomorrow.